Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Jnby Design Limited interim report. Jnby Design Limited offers a diverse range of products and services across various segments. The company's mature brand segment provides contemporary apparel, footwear, and accessories for women, men, and children under its flagship brand Jnby. This includes household goods sold under the Jnby HOME brand. In addition to its core offerings, Jnby Design Limited also operates through its younger brands and emerging brand segments. The company's product portfolio extends beyond fashion apparel to include accessory products and household goods under various sub-brands such as CROQAS, Jnby by Jnby, less POMMEDTERRE, Onmagame, and B10CK. Jnby Design Limited sells its products through both offline retail stores and online channels. The company operates self-operated stores as well as distributor-operated stores to cater to a wide customer base. With a presence in the People's Republic of China and internationally, Jnby Design Limited has established itself as a prominent player in the fashion industry. Jnby Design Limited market capitalization of $12 billion is significantly larger than the average industry peer of roughly $1 billion. This shows that Jnby Design Limited holds a significant advantage in their industry. Jnby Design Limited trades at a higher price-to-earnings ratio of 10 times and a higher price-to-book ratio of 3.75 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 47% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The company have a dividend yield of 6.66%. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. The primary drivers of revenue growth or decline can be identified through an analysis of various factors. One key driver is the increase in revenue from online channels, which has seen a notable rise of 7%. This suggests that the company's digital presence is playing a significant role in driving sales. Geographic expansion into Tier 1 and Tier 2 cities in mainland China has also been a major contributor to revenue growth, accounting for over 50% of retail sales. This indicates that the company's efforts to expand its reach into new markets are paying off. However, not all areas have seen growth. Same-store sales have decreased by 2.2%, which can be attributed to insufficient value-added services to compensate for fluctuating customer traffic. This highlights the need for the company to focus on providing more comprehensive services to retain customers and drive sales in existing locations. On a positive note, revenue from sales has increased significantly, with a rise of 21.1% or RMB 996 million. Additionally, revenue growth in mainland China has seen an upward trend, reaching 1,844,485 RMB 0 compared to the previous period. These figures demonstrate that despite some challenges, the company is experiencing overall growth and expansion. Net income experienced a significant increase over the period, with growth rates ranging from 7% to 11.9%. The exact figures for net income are not consistently reported across all pages, but it is clear that there was an overall upward trend. The profit margins also showed improvement, with both net and gross profit margins increasing. Net profit margin rose by 0.9 percentage points from 19.1% to 20%, while the gross profit margin increased by 1.4 percentage points from 65.1% to 66.5%. This suggests that the company was able to maintain its pricing power and efficiency, leading to higher profitability. The consistency in growth rates for net income and profit margins indicates a stable and improving financial performance for the company. The company's financial performance indicates a strong ability to generate cash from its core operations. According to the provided information, the company has consistently produced positive operating cash flows in recent years. On page 8 of the report, it is stated that net cash flows from operating activities reached RMB 996,043 in 2025. This figure is also reflected on page 40, where it is noted that cash generated from operations was RMB 1,086,033 in 2025. Furthermore, page 36 reports a net operating cash flow of RMB 1,368,615 for the same year. The data suggests that the company's operating activities are generating significant amounts of cash, which is essential for its financial health and growth prospects. The fact that this trend has continued into 2025 reinforces the notion that the company is on a stable footing in terms of its ability to generate positive operating cash flow. Management's outlook on the company's strategy is focused on growth through strategic investments. Despite no plans for material investments or capital assets, they are allocating net proceeds from the placing towards strengthening brand business development and research and development efforts. This suggests a commitment to innovation and expansion. In addition, management expects returns from wealth management products with moderate return rates of 1.9% to 3% per annum. They also anticipate appreciation in value from investments in venture capital funds, which will generate additional investment income. Overall, the company's strategy appears to be centered around generating returns through a combination of strategic investments and existing assets. That concludes the financial summary for Jnby Design Limited. Feel free to comment below, and I will be happy to answer them when possible.